Hey guys, welcome to another webinar. And on today's session, we're going to be looking at every single asset, but I will be picking one or maybe two to dive deep into. So if you've never joined us before, welcome. And we normally have this playback session every Sunday. I upload one video every Sunday containing my outlook to the market on how I see things happening. Now, this is primarily for educational use only. I'm not really giving you a clear direction of what you need to trade or how you should trade it. Please consult a professional or financial specialist for this. Nevertheless, these are my own personal outlook to the market, and I have a clear-cut signal on how to approach the market. So my strategy lies in this way. I have three ways that I look into the market, and one is COT, another is seasonality, and third is probability. Now, you might be wondering, what does all of this mean? COT means commitment of traders report, and primarily the purpose of the COT report is to give us an insight to what the commercials are doing. And when I say commercials, I mean the people that are producing goods in the market or offering services in the market, what they're doing. They primarily don't go into the market to look for ways to make money. They're going to the market because they need maybe a service carried out in Japan, for example, and they need Japanese yen to pay these guys. Or if they need to buy a produce in China and they need the Chinese yuan to get that. So we piggyback off of them because they have inside information on what's going to happen before people like us do, people that are external to the industry do. Now, I've done a scan of the COT report, and from that, you will see in a moment when I go through the slides, through the tabs, pardon me, we would select which assets we feel is right and ripe to trade. So that being said, that covers the COT part. Seasonality is basically just seasons, right? We have winter, summer, autumn, and spring. No, in that specific order, but the market also has its own seasons, right? With the market, they have the low time, the low season, they have the high season. And so why also you also see that in financials, they kind of quarter into four quarters. You have the first, second, third, and fourth quarter of the year, mimicking the season. So each one is a season on its own, and you have to literally break down every season to understand how to position yourself sometimes. I mean, if the market condition is ideal, then that is up for debate. Now, the next thing is probability. Probability is a tool that we develop in-house. We got the idea from a highly professional trader, and we designed the tool ourselves. And probability just gives us a casino outlook to the market, which is, it allows us to know which days have the best chances or best probabilities for us to go maybe long or short. Long primarily means buy, and short means sell. So those are the three-way strategy, and we're not even looking at, the technicals yet. And I doubt in this session I'm going to look at anything technical. I'm just going to give you a total outlook of the market and give you which asset is most likely going to be aligned. And then you guys can carry out the technical analysis, like your support, resistance, your entry, your exit, your take profit, your stop loss. You can do that yourself. And if you don't know how to do that, check some of my previous videos. They're not labeled, but if you go through some of the previous webinars I've uploaded, you'll be able to see how I do the technical aspect of things. So let's dive in. So COT report first, we got gold on the line. And what we look at is the commercials I just spoke about earlier, and we look if they're going long or short. Now, we don't look at these figures. To us, that doesn't matter. What we look at is just the changes. So we look at just this column right here, just 1, 2, 3, just right here, commercials, and which direction they're going. That's all. So 1, 2, 3, that's all we care about. So for gold, we have that going long. So we go gold, long. Now, you might be wondering, why am I going to be looking at these assets individually? That Forex comes in pairs and all of that. It will make sense in a second. Next one is CHF. It's going short. I mean, you can just see that right here. CHF going short. Next one is JPY going long. Now, keep in mind, sometimes they don't actually match. Sometimes they don't. They're all in minus. If they're in minus, you just skip through it. And that's only what I'm taking from this anyway. If it's just long or short, that's all I need. I don't need too much of this. This is stuff you can do in like less than a minute, less than 10 seconds. I mean, you can even go to just click it and see it. That's it. So commercials, they're going short on euro. So euro short. Next thing is USD. We don't have a clear direction. They've taken our position from both. CAD, because we are going long and going short, because it's not clear, so we'll not take that as well. We need something clear. Pounds, they're going short. And AUD, we don't have a direction. And NZD, we don't have a direction. Now, depending on what level you're in trading, if you're very new and these are new stuff to you, I mean, it took me years to research to get to this point to be able to just pull out this long, short, you know. But if you're new, some people can just look at it and say, you know what, Euro JPY, for example, because JPY is going long and Euro is going short, so Euro JPY should go short. You know, in some cases it works with accuracy, maybe level of 55%, 60%, but that's not good enough for us. We want to check and stack that up in our favor. So if we have 55% win rate with the COT, for example, just using the COT, look at our long, short, and taking them in the opposite, we will use seasonality to jump that up to 65%, 70%, maybe even 75 in some certain cases, right? So the next thing we look at is the seasonality. So we go on seasonal, click on that. So when I was talking about Forex comes in pairs, you're already seeing how it's working because I'm already showing, you know, Euro JPY could be short, for example, or, you know, JPY CHF or CHF JPY could also be short, or GBP JPY could also be short. You know, if you just mix and match them together. But that's not what we're trying to do here. The next thing we're just going to look at, let's look at gold first on a seasonality chart. Now, seasonality in this aspect comes in three lines. I mean, they come in 5 years, 15 years, and 47 years. That's what they mean. And you can isolate each chart and measure it. But the way we use it here is simply we're looking for when all 3 dates correlate like that. All 3 timelines, all 3 years correlate, the 5, 15, and the 47 years. Those are the average within those year periods. And we only going to take trades when they correlate. When they don't correlate, we leave that trade regardless if the COT is going that direction. So right now we have gold going long, and this is the 5th, 21st of 5th. So we're somewhere around here, right? So now if we zoom in and we look at this, we zoom in and we look at this, we see 21st right here. The 47 years look like going to go long, but then dipped. The 5 years look like it's going to go long like that, but then dipped, you know, and the 21 years look like it's going to go long, then start dipping. This isn't clear. So for that reason, we take out gold out of that trade. Even though it might happen, you know, the market might go long, but we do not care about that. What we care about is it aligned for us? Because the worst thing is to take the trade because of you think it will happen and then it doesn't happen. But the best thing is to be patient and say, okay, you know what? I was actually right in the direction. Maybe I can see a way to tweak my strategy to see how that work, or I'll just wait till everything aligns for me, you know, whilst not losing any money at all. So next one is CHF. We're looking at the 21st again. So we're expecting CHF to go short. Now, from what we can see right here, it's right here right now. We have that 1 day goes short for all 3. Then 15 years goes, let me see. 15 year goes long, 5 years goes long, and 45 goes long, then it drops to short. The short isn't sufficient enough. We only have a few, one day short, another day long, another day short. So we do not want that neither. We need it to be clear that it's going short. All right, so we delete that out of the equation and then we'll move to the next one. And basically what we're doing here is we're doing elimination, right? We just want to eliminate and stick with the ones that's clear for us to take. If it isn't clear, you know, we won't take it. Now you might be looking, okay, we only have 3 assets left. If JPY comes out of the rule, then Euro going short, GBP going short, that wouldn't work. No, it doesn't work. Even if we have one, there is so many ways we can break that one down into. We can break it into 7, 8 trades if everything aligns with that. But I'll show you that next in a moment. So go to JPY next. Same thing, looking at this period of time. So JPY right here. Now we're expecting JPY to go long, right? But what we're seeing now is JPY going short. So for that reason, we're going to delete JPY out of the equation. We move to Euro. So we're literally filtering. By doing this, we've probably covered maybe 27 assets already, or maybe 20, yeah, roughly over 20 assets already. You won't understand, but if I say Euro, JPY, Euro USD, Euro CHF, Euro AUD, you know, those are some of the assets. If we align them like that, from this Euro, we can get 7 different pairs from it on the majors and the minors. And if we even go into exotics, we can get maybe 10, 15, maybe even 20 trades out of just this one if we wanted to. So that's why I said we've covered like 20 trades already. The next one is here, Euro. So we're going short. Now, if you look at this, this is beautiful right here. See this? From the 21st, we're expecting Euro to go short, even though the 5 years kick back after to 23rd. But from 23rd, we have that going all the way to roughly about 26th. So we got it going from 23rd all the way to 26th. But I'm neglecting Monday right here because the 5 years is going up rather than going short. So we'll take that like this instead. And around here as well, it tends to go higher, but because we've seen it bottoming out on 26th, we'll just leave that. So what we'll do is 23rd all the way to 26th will be what we'll do. So Euro 23rd to 26th short. So now we have one trade. We can delete that out of here, or we can leave it. It doesn't matter at this point. Next thing we go for is GBP. So same thing applies, same principle. Look for the 21st. It's right here. Just zoom in a little bit. We only have 1, 2, 3 on 5 years, but yeah, 15 and 45 is slightly tricky. I mean, we can argue this will be a short because it ends up right here, but for clarity's sake, I just say we leave it for now. So the next thing we do is go to probability. And now we want to look at every pair that we can pair Euro up with, right? So the easiest way for me to do that, I just go to search, I just type in Euro. So I start loading it up. Euro CHF, Euro JPY, Euro USD, Euro GBP. So you can see them now and see clearly what I'm trying to attain. It's quite a beautiful strategy, you know, by looking at just one pair or one asset itself, you can deduct so many pairs out of it. And to get access to this tool, all you need to do is click the link in the description. It's also there in your screen, business.dmempire.co.uk, and you go /pricing, or you go to DM Empire, business.dmempire.co.uk, and from there you can just click on the price and you see the price for this tool and how to get access to these tools. Okay, so probability is next. Now we know that we're in May, so in May it gives us the percentages of when if we go buy or if we go sell. So we 21st. Because of this, we're looking at 23rd to 26th. Now, because we wanted to go short, we need 3 days going in our favor. The main reason I choose 3 days is because if it fails the first day, the second day won't fail. If it fails the second, the third day won't fail. And if it fails the third day, that trade is never going to happen. You might just jump out of it. but the likelihood of it failing like that on 3 days back to back is very low, because if it fails the first day, by second day, it will push you back into profit. So that way you can lock your trade in. And then by third day, even if it comes against you, you'll be kicked out in profit. Or if it goes in the direction you want, then you'll be massively in profit. But it helps you, minimizes your loss, and also assures you and give you a peace of mind that you are covered in the long run. So Euro, we're looking from the 23rd to the 26th, and we're looking for it to be short. All right, so we need 3 days to be short in our direction at least. So what we see right here is this. We have Euro CHF right now. We have short, short, short. We have those 3 days, even the first day going short, but you can decide to trade that. We can decide to leave that. At the moment, I'll just leave that, and I'll just call it Euro CHF because that's the asset we're looking at. So we go 23rd. But this time around, I exit on the 25th, 26th, we exit on the 25th, right? So anytime from afternoon time, 25th, where you see maybe your support level, then you can just exit, right? So that's how to go about that. So next one is Euro JPY. Same drill applies, May 23rd. So we're expecting to go short. It goes short right here, came back long, long, long. So Euro JPY out of the list. Next thing, we look at May again. Looking from 23rd, Euro USD. It doesn't happen right here. Euro isn't going short. So for that reason, we let it go. Next asset, Euro. Okay, you see right here as well, Euro GBP. So it goes short, 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 3 days, and then it's out. So now you could wonder, because Euro is going short and GBP is already also going short based on the CO2 report, one of them has to win or they consolidate. So I normally just like to start it because I know both of them are going short, you know. So, but the trade is still live. You just have to check out and be careful and monitor it. So the next thing to do is Euro CAD. We go 21st again. Now 23rd, my bad. And what we can see, 23rd was going long and then short and long and short. So we don't want that. And then we have Euro AUD. So this is Euro AUD. We got that going short, short, but we have long and short. It's a risky one because we can still exit on 26, but for example, say we'll keep it simple, we take that out of the way, we don't need to trade that. And then last but not the least, Euro NZD. Here we go. So Euro NZD plays out exactly how we want it. So from the 23rd all the way to 26th, we have that right there. So we have Euro NZD 23rd rather than 25th, now 26th, short. So you see from all of those analysis what we have. We have 3 beautiful trades right here without doing too much in the market, just doing a little bit of overview. I haven't even opened the chart yet to do the analysis. And this is just pure magic, right? Pure magic. And it works good because it has a win ratio of up to, even in some cases, we've seen win ratio of up to 90% plus, 93%. You know, we've seen 87% win percentage with these type of trades. So if you utilize your money management accordingly and you take your time with it, you don't rush, you don't tighten your trade too much, you know, you would have a very, very beautiful winning trade in your hands. So that's all I have for you guys today. Remember, if you need the tool, all you need to do is go to the website, just copy and paste that right here, Business of Dame Empire, and then just do pricing at the back of it. That will take you directly to the pricing page in which you can then utilize that to, you know, buy or access this tools that we have for you. I'm just trying to load it up for you so you can see. So we have the tools right here, and then you can just become a member by clicking any of these. These membership types tells you exactly what you're going to get. The professional membership gives you access to all 3 tools and some videos and access to previous webinar videos and some other indicators and EAs in there that can help you trade automatically. And the professional indicator tools, just for the tools alone, will give you access to seasonality, probability, and the COT report. So thank you guys so much for joining this webinar, and I hope to catch you on the next one. If you have any questions, leave a comment down below. I'll surely reply you. And don't forget to give us a thumbs up and subscribe. Thank you guys, and have a lovely trading week ahead.